Hi, David here from Critical Trading. Hope everyone's keeping well. In today's video, I'm going to talk about how to profit from stock market downturns. Now, the stock market has not been doing quite well recently. January has been quite a bad month, and the S&P got to a correction territory, meaning that it lost around 10% from its most recent high. Is there any way that you can kind of hedge against this and trade a different strategy as well that would profit in these high volatility environments? And the answer to that is yes, there is. And I'm going to give you an example to take away for your own trading to start experimenting with in this video. But before we get to that, I've got a great news to share. I'm releasing a free course called Elevate Your Trading Using Systematic Strategies. What you're going to get out of it is an actionable breakdown of how to start trading fully systematically. And in that webinar, I'm also going to give you a fully systematic strategy that made 105% profit in 2020. And I'm going to share its full rules with you so you can then take it away for your own trading. So if that sounds good, follow the link in the description and sign up today. There's a saying in the market that the stock market takes stairs up and elevator down. And what it means that when the stock markets are doing well, they just kind of slowly go up in a very slow kind of trend, which is typically associated with low volatility. We can see that here, for example, we can see that the stock market is just going up slowly, just so it then makes these huge violent spikes down that are much quicker. And so the problem is, like I said, if you have a trend following or momentum strategies, these are going to suffer because there's really nothing you can do on an individual strategy level. The last thing you want to be doing is go into your trend following or momentum strategies and start tweaking their parameters and over optimizing them. What I believe is a much better approach in this situation is to employ different strategies that potentially can benefit in environments like this. And that's what I'm going to show you in this video. I'm going to give you some inspiration to take away from this video for your own trading. I'm going to show you a few rules that I use in my two mean reversion strategies that hold their positions intraday only. So they open their trades and exit within the same session, and they trade both long and short, and they generally benefit from high volatility environments like we have now. So let's just start with looking at a few equity curves. The red equity curve on the screen is basically a line chart of the S&P, which is what I had on the previous screen. This is actually SPY, which is the ETF that tracks S&P. The very rightmost point of the chart is January 2022, so the most recent pullback. And below, I've got two equity curves of two of my systems that I trade in my own portfolio. One of them is a system that trades on a weekly basis. It opens trades in the pullbacks in the S&P 500 stocks, and the other one is a mean reversion system that holds its positions for roughly about 3 days. Now we can see that both of these systems are highly correlated in this short period of time to the SPY, and both had some losing trades at the moment. Despite these systems over a long period of time are very robust and very profitable. I trade them in my own portfolio and are part of my online training program called 5-Week Portfolio. So I'm still happy with these systems. There's no way I'm gonna, change them. There's no way I'm gonna remove them from my portfolio. That is not the point. Of course, systems like these will have some periods when they are highly correlated to the market and not doing well. As I said, the last thing you want to be doing is to start changing these systems on the go. What is much smarter to do instead, in my opinion, is to implement new systems to trade alongside these two. And like I said in the beginning of this video, I think that the shorter term intraday mean reversion in the stock markets works really well. Now let me show you what I mean. I've just put two different equity curves on the screen, and these two different equity curves belong to my other two systems, which are both mean reversion systems. So they are trading very short mean revertive movements in the stock markets. But one specific about both of these systems is that they only hold their positions for 1 day. So they're actually intraday systems. They enter during the trading session using limit orders, and they close all their positions at close of the very same day using what's called market on close order. Now, in reality, I have a Python script that basically trades these strategies for me, so I don't trade them manually. I don't trade manually because all my strategies are mechanical and systematic, so they can be written in a form of a code. But what I want to show you is that both of these strategies are doing really, really well. One of these strategies is actually a short strategy. It sells stocks, and the other one is a long strategy, so it buys stocks. So I'm trading both of these in my portfolio, and as you can see, even the long strategy is doing really, really well in this high volatility environment. Despite the market is falling, you can see that the strategy has made new equity highs, and that's exactly what you want to be doing. You don't want to be removing your strategies just because they are in a drawdown. You want to be thinking on a portfolio level, and you want to be implementing new strategies that will benefit from different market environments. So let me just give you a couple of rules to start with, so you can then take this away and potentially implement these kind of strategies into your own trading process as well. This is one of the actual trades that it made, and we can see that as the market is falling, the volatility increases, and then the strategy is basically waiting for a trading setup, which took place on this day that I've just circled on the chart. The day that follows is a very significant reversal, and the strategy actually managed to enter long, so it bought the stock on this particular day on this particular price that I just highlighted, and like I said, the strategy then closes its trade on the very same day at its close. So the benefit of this strategy is that it doesn't hold its trades overnight, and this is very important because as the volatility in the stock market rises, when it may, during the stock market downturns, the prices of S&P are falling, it's now in a correction territory. What tends to happen is that the overnight movements, the overnight gaps tend to get bigger and bigger, and that can negatively affect your positions when you hold them overnight. So this strategy doesn't do that. It closes its positions, it doesn't hold anything overnight, and that actually greatly contributes towards its edge. So let me just give you a few rules to start with. I think the good starting point are the 4 rules that I've just shown on the screen. It's very, very simple. None of my strategies are complex at all. I don't think they need to be in order to work. I'm a great advocate that strategies should be simple, but what you should be doing instead of trying to, come up with the super complex strategy is you should be focused on combining simple strategies instead. So this is something that you can start with. We've got 4 simple rules. I've got the minimum price filter, I've got a volatility filter, so I'm looking for stocks that are trading above a certain price and have a certain volume. And then the actual trigger is that I want to see the rate of change of the closing price below 5%. So I want to be buying stocks that basically lose more than 5% on any given day, and I want to buy them the next day at a limit price, and I calculate a limit price using the previous day's low, and I take what's called ATR, which is an indicator that basically shows you how volatile the stock is, and I calculate the limit price for the next day based on that. I myself, with the strategies that I've shown you, use a few more filters, but the core of the strategies are essentially the same as I'm showing right here. So if your strategies have been suffering during high market volatility, take this code and try experimenting with it to see what the results will be. Thanks for watching. David at Critical Trading, signing out.